Ladies and gentlemen, buckle up, because what we're witnessing right now is nothing short of a financial revolution.
Leading to a digital currency and complete state control of the population.
In 2022, a hidden agenda was exposed, one that many never saw coming.
When we speak concerning, like we talk about this issue of the Queen's death, is actually important, and you're going to see its importance in a shift of economic policy. There's a lot of economic shift policies that have now begun because of that. You remember when we were in a partnership meeting a few weeks ago, I talked about when the prophecy of the Queen, the death of the Queen came. In that partnership meeting, I talked about a reform of money that they will pursue. This reform is not so far still. You'll see things, but the Spirit of God will curb them because of an intention. To begin introducing, I'm talking about from the Bank of England, introducing weird transactional things that put people's money at risk. But the Spirit will create a way around that. In the name of Jesus.
January 14th, 2025, news broke out about the launch of a digital pound lab aimed at testing the potential of a central bank digital currency. This moment signaled the dawn of a new financial era. The Bank of England took the front seat, driving the push for CBDCs and digital IDs, a transformation that could completely reshape how we view money, banking, and even financial freedom. Unlike traditional cash, this digital currency would exist entirely under the control of government and central banks. 14th October 2025. What they're not openly talking about are the dangers. When CBDCs are linked with digital IDs, money can become fully programmable, traceable, and controlled, giving authorities an unprecedented level of power over how people spend and manage their finances.
Now let's set the stage. The Bank of England, alongside other central banks, has been quietly working on CBDCs, central bank digital currencies. And here's where it gets interesting. Discussions about linking those CBDCs directly to digital IDs. That's not just innovation, that's a fundamental redesign of money itself. Imagine if every pound, every transaction, every single financial move you make could be tracked, tagged, and even restricted. This isn't speculation. This is being openly debated in parliamentary circles. Documents are being withheld under secrecy exemptions, fueling public concern that these changes are being decided behind closed doors. To understand how big this is, let's rewind. In 1971, President Nixon severed the US dollar from gold. Overnight, the world's monetary system changed. Inflation soared, assets like gold and stocks boomed, and the middle class lost purchasing power. Today, we're witnessing a similar crossroads. The difference? Back then, money shifted from being backed by gold to being backed by the government promises. Now money is shifting again from physical notes and bank deposits into digital programmable tokens issued by central banks. The last shock created winners and losers. Wealthy asset holders thrived, ordinary workers struggled. And history tells us that pattern's about to repeat. So how does this actually work? A CBDC isn't like Bitcoin. It's not decentralized. It's the opposite. It's issued directly by a central bank, giving them unprecedented control. With CBDCs tied to digital IDs, governments could theoretically program where you spend, what you spend on, how much you can hold.
Now, talking of central bank digital currencies, I can tell you this. that I did go with my colleague Richard Tice to go this morning to see the Governor of the Bank of England. And Mr. Bailey welcomed us, was very polite to us, listened to what we had to say. I asked him about central bank digital currencies. He made it clear that the bank and the government are pursuing the idea to see whether they think it can work in practicality. He thought it could be very useful in sorting out fraud. My response, which is a political, not a central banking response, was over my dead body. Callum says, fully support the use of ID cards if they operate on the basis that they are correctly validated and can't be created fraudulently. I have one on the continent and they're extremely useful in confirming my identity for great many transactions, as well as setting up things like phone contract.
When we speak concerning, like we talk about this issue of the Queen's death, is actually important, and you're going to see its importance in a shift of economic policy. There's a lot of economic shift policies that have now begun because of that. You remember when we were in a partnership meeting a few weeks ago, I talked about when the prophecy of the Queen, the death of the Queen came. In that partnership meeting, I talked about a reform of money that they will pursue. This reform is not so far still. You'll see things, but the Spirit of God will curb them because of an intention. They'll begin introducing, I'm talking about from the Bank of England, introducing weird transactional things that put people's money at risk. But the Spirit will create a way around that. In the name of Jesus.
Now, supporters say this is about efficiency, combating fraud, and modernizing finance, but critics, including economists like Richard Weiner, warn it's a step towards a digital gulag system where financial access becomes conditional on compliance. Let's talk numbers. If you chart up the S&P 500 against the US M2 money supply, what you see is clear. Asset prices haven't been soaring because of growth. They've been keeping pace with currency debasement. The same pattern is unfolding in the UK and Europe. With CBDCs, the printing press becomes even more direct. Combine that with digital IDs and suddenly monetary policy isn't just about interest rates. It's about personalized financial control. This means one thing for investors. Assets will explode in value relative to debased currencies. Just like in the aftermath of the Nixon shock, those who hold scarce, hard, or digital assets will thrive. Those who hold only fiat, they'll get left behind. But let's not sugarcoat it. There's a darker side. If your digital ID is linked to your CBDC wallet, then your financial life is an open book. Imagine governments trying to spend permission to carbon scores, health data, or political activity. This isn't science fiction. China's social credit system already does this. Europe and the UK are openly discussing incentive structures built in programmable money. Yes, investors can profit, but for the average citizen, this could mean living in a world where money isn't yours anymore. And this just isn't the Bank of England story. The European Central Bank is rolling out the digital euro. The US Federal Reserve is testing wholesale CBDCs with institutions. The IMF is openly pushing for interoperability, a future where these digital currencies connect across borders. Gold is being tokenized. Treasuries are being tokenized. Even real estate is entering blockchain. This is Bretton Woods 2.0, a re-architecture of global finance. And just like after Bretton Woods in 1944, the nation or group of nations that leads this transition will hold outside power over decades. Now here's where optimism comes in. Every great monetary shift in history has created massive wealth transfers. When money detached from gold, those who held stocks and real estate won. When the internet emerged, those who bet on digital companies won. Today, the opportunity lies in crypto, privacy coins, tokenized assets, and scarce digital commodities like Bitcoin, because while governments try to centralize, the free market always builds alternative.
When the future you once only had about finally arrives, what will you do about it?